This is Horizon's Middle East and Africa. Our top stories this morning. Stocks edge higher as traders look ahead to the Fed's annual meeting at Jackson Hole for clues on the policy path. US Secretary of State Antony Blinken arrives in the Middle East as Israel and Hamas trade blame over impeding Gaza ceasefire talks. And the race for the White House intensifies, with Vice President Kamala Harris hitting the campaign trail ahead of the Democratic National Convention. And Republican nominee Donald Trump looking to shore up support for himself in 4 key swing states. It's just gone 8 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jemana Basecci. Welcome to a new week, and I hope you've got your cowboy hat, because we're off to the mountains of Wyoming for Jackson Hole. Traders, of course, wanting clarity on the rate path ahead. Is it going to be a 50 basis point cut or a 25 basis point cut in September? But I dare say they're not going to get that clarity. Perhaps just encouragement that a cut is coming in September. We had another week last week of good news for stocks. Good news, actually good news once again. And actually Goldman changing its recession odds now from 25% to 20%. So as we look to the start of the new week, when it comes to equities, futures pointing higher both in Europe and in the US as well. The 10-year US Treasury yield at 3.8%, so pretty steady there. But Brent shy of $80 a barrel, and traders really monitoring the situation here in the Middle East as we continue to await a ceasefire deal on Gaza and we continue to await a potential retaliation from Iran. It's a light week when it comes to eco data, so perhaps we could see the politics and the geopolitics dominating sentiment this week. I just want to take a look at where we start the week when it comes to Fed bets, because, of course, these really are going to be in focus as we get the commentary out of Jackson Hole, as we get that eco data. And so you're looking at them having pulled back significantly from that post-jobs carry trade unwind, and swaps market pricing implying now 30 basis points of easing next month, 93 basis points by the end of the year. And I would just contrast that with the picture earlier this month. So we had about 150 basis points of cuts for the rest of the year priced then. And as I say, we'll continue to monitor this picture as we watch for you all that commentary out of Jackson Hole, not just Jerome Powell speaking, but also the Bank of England's Andrew Bailey and the ECB's chief economist Philip Lane as well. But let's check in on how Asia markets are faring. Avril Hong is on standby for us in Singapore. Avril, what's happening where you are?
Yeah, Lizzie, we're seeing Asia's stock gauge extend gains from last Friday, and this is amid the backdrop of how investors are seeing recession fears easing. Of course, we're looking ahead to Jackson Hole, but here in the Asia Pacific, a key one to watch will be what we get from BOJ Governor Ueda on Friday, because his appearance before Parliament coincides with Japan inflation numbers. And it's worth highlighting that coming into this week, we already saw bond traders a bit more cautious of potentially a hawkish tone coming through. But today, what we saw is how the yen traders are following suit amid the rebound in the Japanese currency. And of course, that has knock-on effects to what we're seeing in equities in Japan. So this is why they're sinking further into negative territory as the session progresses. They are the ones that are capping those gains you see on Asia's stock gauge. Lizzie.
All right, Avril Hong, as we keep an eye on the yen, we thank you. Now, let's get back to the geopolitical situation here in the Middle East. Israel and Hamas blaming each other for impeding a ceasefire and hostage deal. That's as the US Secretary of State Antony Blinken arrived in Tel Aviv to press for an agreement. On his 9th visit to the region since the war broke out last October, Blinken is going to meet with top Israeli officials before travelling to Egypt tomorrow. And for more on all of this, we can speak to Bloomberg's Poole Wallace with me here in Dubai. Paul, what are the sticking points at this point in the ceasefire talks?
Lizzie, so there are several sticking points, and to be honest, they're the same sticking points in many ways that we've had over the last several months. One of them is the number of hostages, living hostages that Hamas will release to Israel in the first stage of any ceasefire. It's still unclear just how many of the hostages are alive. And Israel is trying to, for obvious reasons, trying to maximize the number of living hostages that will be released in the first phase of a deal. Another big sticking point is the number of Israeli troops that will be left in Gaza and where exactly in the first phase ways of a deal. Israel wants to keep troops along what it calls the Philadelphia corridor, which runs alongside the southern end of the Gaza Strip, alongside the border with Egypt, and the Netzarim corridor, which essentially bisects Gaza. These are two very strategic corridors for Israel. Hamas does not want it to keep as many troops as it has in both those places at the moment, but Israel seems to be insisting that it must be allowed to do that.
But are there any signs of potential flexibility that could get us to a deal here?
There are small signs. The Americans are saying we're closer to a deal than we've ever been. Hamas and Israel are both blaming each other for being obstinate and stalling these talks. There are some signs, however. For example, the Netzarim corridor, it seems possible that Israel will ease its stance on that. But to be honest, it doesn't seem as if we had any major breakthroughs in the talks in Doha last week.
And despite the progress, shall we say, in the truce negotiations, you've still had that cross-border fire between the IDF, the Israel Defense Forces, and Hezbollah intensifying. So you've had total blackout, as Lebanon is saying there. What's the latest in that exchange?
So the tensions on Israel's northern border between its forces and Hezbollah are still very, very high. There's still the threat of a major Hezbollah reaction to the assassination by Israel of one of its most senior commanders a few weeks ago in Beirut. And of course, we're still watching to see if Iran retaliates for what it claims was an Israeli assassination of Hamas's former political leader Ismail Haniyeh around the same time as that other assassination in Beirut. So things are extremely intense. There was some Israeli fire on southern Lebanon last night on Hezbollah positions. Nothing too major, nothing out of the ordinary, but still, we still have to watch that very closely, and we're by no means beyond the point where we could see a full-scale conflict between Hezbollah and Israel and/or Iran.
And of course, we still haven't seen Israel claiming responsibility for the killing of Ismail Haniyeh. Paul Wallace, our leader of our economy and government coverage here in the Middle East and North Africa, we thank you as always. To the US politics now, where Vice President Kamala Harris has embarked on a bus tour through Pennsylvania ahead of this week's Democratic convention, urging supporters to fight in the critical battleground state.
We know our country is going to be as strong as our willingness to fight for it and to fight for what we stand for. You know, when you know what you stand for, you know what to fight for.
For more, let's bring in Vonnie Quinn, who joins us now from Washington. Morning, Vonnie. This is really Kamala Harris's moment to introduce herself to the country, but her poll, and to show that poll success so far isn't just a honeymoon. I wonder if she can continue the momentum, what the Democratic Party is going to hope to achieve this week at the DNC.
Exactly, Lizzie. You said it right there. She is going to want to introduce herself to a broader audience. The DNC, to some extent, is preaching to the converted, right? 50,000 people descending on Chicago, and they are all Democrats, as we know. But what Kamala Harris wants is to persuade the persuadable voter, the swing state voter, the voter that hasn't made up their mind yet. So she will hope that some of what happens at the DNC percolates out to a broader audience, perhaps those that are curious as to who Kamala Harris actually is. Yes, she's been the vice president, but what do we really know of her? She hasn't really been able to take the stage for herself. She'll certainly be able to do that Thursday, and she'll have had a huge introduction. President Joe Biden giving the keynote address Monday night. After that, you have the Obamas on Tuesday, Wednesday, Bill Clinton and the VP pick, Tim Walz, and then Kamala Harris will formally accept the nomination Thursday. You mentioned the polling. It has directionally been going in the Democrats' way, and in fact, in some polls, she is outdoing her opponent, Donald Trump, by perhaps not a statistically significant margin, but definitely a directionally significant margin. She has now, for example, gotten rid of the Biden deficit, the polling deficit that we had been seeing before Biden pulled out of the race. So Democrats are going to want to keep that going. They're also going to want to continue this sort of joyful agenda that's been on the table. It's not just for politicians, it's obviously also for campaigning and for fundraising. John Legend, Julia Louis-Dreyfus and people like that are holding events in Chicago this week in order to raise money. 10 weeks to go in the campaign. It's a short time, but it's also a long time when you're trying to spend, hundreds of millions of dollars.
And can they continue that fundraising ramp upwards? Look, this isn't Chicago's first rodeo. It's held more presidential conventions, I should say, than any other city. But it's also had a history of protests. It's been preparing for this week. How do you think that Harris and the DNC as well are going to respond to the thousands of pro-Palestinian activists expected to rain down on Chicago this week?
Yes, a lot of protests, and there have been a lot of organising and a lot of court cases, in fact, in order to come to some kind of an agreement between protesters and the city of Chicago and the police and everybody really involved. And it looks, for the moment at least, protesters and activists and organisations are saying it's going to be peaceful, but there will be a lot of protests. For example, Tuesday night we're anticipating outside the Israeli consulate, just a couple of miles away from the centre where the DNC takes place, that there will be a massive demonstration, a massive pro-Palestinian demonstration. And then there are marches planned, and one in particular planned to go out through the week. So Kamala Harris obviously will have to deal with this question of how do you respond to protesters. We know, she said already, she hears them. She spoke directly to them when Netanyahu was visiting Washington, D.C. just a few weeks ago, you'll remember. But she also is very keen to point out that, you know, if they get rowdy or disruptive, then the conversation stops. She doesn't listen to them. We know that her position on Israel is that it can defend itself. It must defend itself. She is, you know, absolutely behind the Biden administration agenda on Israel. But she also has been staffing up in order to reach out to Muslim and Arab voters. She is very well aware that there is not just one contingency, but several demographics and, you know, groups in the United States that have been very turned off by the Biden position on what's happening in Gaza. And she wants protesters and the wider public to know that she does have, you know, an understanding of what's going on humanitarian aid and humanitarian crisis-wise.
All right, plenty to watch out for. Vonnie Quinn across it all for us from Washington. We thank you. Still ahead on this week's Middle East Money segment, the founder and managing director at Global SWF, Diego Lopez, is going to join us to dig deeper into how Middle Eastern sovereign wealth funds are changing the game on Wall Street. But first, we'll speak to the CIO at Ascalon Capital, Isaac Poole, on what markets are watching out for ahead of Jackson Hole. The Fed's gathering. Plenty to watch out for from Jerome Powell and his colleagues around the world. So stay with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. You just saw the beautiful mountains of Wyoming. We're heading there this week. Investors looking ahead to key central bank decisions in the region. And, of course, we are braced for all of the commentary out of Jackson Hole. We can look at it now with Isaac Poole, CIO at Ascalon Capital. Welcome to the programme, Isaac. I'm thinking back to Jay Powell's appearance in 2022. I'm thinking back to the plunge in markets off the back of that appearance, and I'm wondering just how badly the stock market would react if he's even vaguely hawkish this time. What do you reckon?
It's a real risk because the markets have really positioned themselves for rate cuts from here. They're desperately wanting to hear from Chair Powell that there's at least a 25 basis point rate cut, if not some guidance that maybe it's going to be 50. So that has left a little bit of risk that maybe he pushes back and says, you know, the economy's doing okay and inflation is coming down, but we don't need to rush just yet. That said, I think that would be a difficult message to put out there because Chair Powell and other Fed presidents have really started to get behind that 25 basis point rate cut in September.
Were you in the 50 basis point camp after all of the data that we had last week?
I wasn't, and not because I don't think they should cut 50 basis points. I think there's a really good argument for them doing that, but it would just be a difficult move to message from where they have been. And when you look at what's going on in the economy, it's clearly slowing. The unemployment rate is moving higher. Inflation is coming down. We're seeing manufacturing PMIs weaken. The rates need to be cut. And I think there's a real chance that we see an emergency rate cut later this year. But right now, I think that's going to be difficult to get across the markets. I think steady as she goes from the Fed will be a better option.
Well, that's really interesting because you've seen Goldman slashing their odds of a recession from 25% to 20%. How likely do you think it is that Powell can achieve that soft landing?
I think history is against him, to be honest. And part of the problem here is that the economy has already started to slow, and the unemployment rate is a really clear one to look at. The manufacturing PMI evidence that there is some slowing in retail sales growth, notwithstanding the most recent number. It's going to be really difficult to achieve that soft landing. And when we look out over the next 6 to 12 months, it doesn't mean that we have to have a recession. I think it's more likely that we just see growth slow a lot faster and a lot further than equity markets are pricing in at the moment. And therein lies the real risk, I think, for markets. Not that it's a recession, but more so that the soft landing is perhaps not quite as soft as everyone's hoping for.
I mean, that's the growth picture, but what about the inflation picture? You've got some investors taking out effectively insurance policies against the inflation risks, given the potential for US-China trade tensions to flare up again because of the politics, given the geopolitical situation here in the Middle East. I wonder if you think that's smart, even if it's not really a consensus trade yet.
Yeah, I mean, I think that's really highlighting the cacophony of problems facing this soft landing story. It's slowing growth, but also the risk that we see policy-induced inflation down the track, and that's going to make it very difficult for the Fed to manage through. I think taking some risk against not necessarily a stagflation event, but some stickier inflation does make sense at the moment, even though I would say it's perhaps not a core view that inflation will re-emerge. Taking some protection against that does still make sense.
And just finally, Isaac, we were hearing there from Vonnie Quinn in Washington as we look ahead to the Democratic National Convention, but we already heard a taster of Kamala Harris's economic plan on Friday. I wonder what you make of it from an economic standpoint, from an investor standpoint.
Yeah, I think that what we're going to see, whomever wins the election, is no appetite to pull back on fiscal spending, no appetite to pull back on fiscal largesse. And that, I think, will make it a challenging outcome for the Fed to manage through. The market is absolutely clamouring for lots of rate cuts, for them to pile into emergency rate cuts and support the economy. You've got both sides of politics pushing back against that. And that, I think, does raise the risk of some significant volatility, both in equity markets, but also in the bond market and credit markets as we're looking out over the next 3 or 4 months. So, yeah, I think at the margin, we're seeing a combined likelihood of high volatility heading into the back end of this year.
Do you think we could see more of the same volatility that we just saw in the previous week?
I think there's a real risk. Markets are fragile at the moment. I think that's really important. There is a desire and a hope that we see a re-acceleration of growth, a re-acceleration of earnings in the S&P 500, and the economy is moving in the wrong direction for that to happen. And so while we've seen a pile back into risk in the wake of some big downside volatility, what that's really opening up is the chance that any negative news from here, call it another negative unemployment print or a weakness in the manufacturing PMI, that sort of a negative data point could really crack sentiment. And I think it does increase the risk that we see some big volatility over the next 3 months or so.
All right, Isaac Poole, CIO at Ascalon Capital, we thank you for joining us. But it looks like it's going to be another risk-on session with futures pointing higher both stateside and in Europe. Euro Stoxx 50 futures higher 0.1%. We'll bring you plenty more news ahead here on Horizons Middle East and Africa, so stay with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. To some geopolitical top stories now. Libya's central bank says it's halted operations after a senior employee was kidnapped. It's the latest example of how a security void stemming from a political feud is pushing the OPEC nation deeper into chaos. The regulator says it won't resume work until its Director of Information Technology is freed and back at his post. Libya's split between rival administrations in the west and the east. In other news, the International Atomic Energy Agency is warning that safety at a Russian-occupied nuclear power plant in southern Ukraine is worsening. That's after a drone strike hit the Zaporizhzhia plant over the weekend. The IAEA warns it's seeing an escalation of nuclear safety and security dangers in the area as Ukraine continues its incursion into Russia. Elsewhere, Thailand's new Prime Minister says her administration is scrutinising almost $14 billion in cash handouts to its citizens. She says the country's key economic stimulus plan needs more study to ensure fiscal compliance. The cash handout was a flagship promise of the Taskin-backed Pheu Thai Party and the centrepiece of a push to grow the Thai economy. And Elon Musk's social media platform X is closing its operations in Brazil while keeping the service available there. The move marks an escalation in its fight with a Brazilian Supreme Court judge who's cracking down on fake news and hate speech. X says the judge threatened its legal representative with arrest for refusing to shut down certain accounts. Those are some of our top geopolitical news stories this morning. But as we look at the markets starting the week, we are seeing futures pointing higher both on Wall Street and in Europe. S&P futures higher 0.1%, a similar move higher in Europe. We're looking at Treasury yields steady on the 2- and 10-year stateside, and across Europe we await the open there. But this week, really a week dominated by the commentary out of Jackson Hole, pretty light on the economic data, but of course we also mind the geopolitics, and Brent at just shy of $80 a barrel. We'll discuss more next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Stocks edge higher as traders look ahead to the Fed's annual meeting at Jackson Hole for clues on the policy path. US Secretary of State Antony Blinken arrives in the Middle East as Israel and Hamas trade blame over impeding Gaza ceasefire talks. And the race for the White House intensifies, with Vice President Kamala Harris hitting the campaign trail ahead of the Democratic National Convention, and Republican nominee Donald Trump looking to shore up support in 4 key swing states. It's just gone 8:30 across the Emirates. I'm Lizzie Burden in Dubai. Welcome to a new week. It is Monday, and we're looking ahead to that Jackson Hole meeting. Get your cowboy hat. We're going to Wyoming, and traders really hoping for clarity on the rate path ahead. They really would like to know whether we're going to have a 25 basis point cut or a 50 basis point cut in September, but I can't promise you that clarity. Perhaps we'll only get the signal that a cut is coming, and as we were just discussing, if we don't get that signal, perhaps disappointment lies ahead for the equity market. Futures currently pointing higher both in Europe and the US. We had good news equaling good news last week for equities, the best week of the year so far for stocks, and we're also going to get the FOMC minutes this week, as well as a little bit of data, though we are light on data this week, to feed in to the market story. You're looking at the 10-year Treasury yield at 3.8%, so pretty unchanged as things stand, and Brent just shy of $80 a barrel as traders continue to monitor the situation right here in the Middle East as we await a potential retaliation from Iran and as we potentially get a ceasefire deal on Gaza. We also monitor, of course, the situation in Ukraine. But let me just flip over the board to the story of Fed bets as we look ahead to Jackson Hole. We're really going to keep monitoring these throughout the week, but currently swap market pricing implying around 30 basis points of easing next month, 93 basis points of easing by the end of the year. And you can contrast that to the picture at the start of this month. Traders were pricing more than 150 basis points of cuts for the rest of the year. So we'll keep watch on this as we get that commentary out of Jackson Hole, as well as the Fed minutes and that housing demand and weekly jobless claims numbers as well. But let's check in now on how markets are faring in Asia. Avril Hong's on standby for us in Singapore. Avril, what's happening where you are?
Yeah, Lizzie, we're seeing Asia's stocks gaining ground, led by Chinese tech names. Hang Seng Tech rising by the most in about a month and to the highest in about a month as we see broad dollar weakness and those recession fears fading. But Japanese equities are the outlier today as the yen rebounds. Look at where dollar yen is hovering closer towards the 146 level. Flip the board as we have investors really keeping an eye out on the BOJ this Friday, where Ueda appears before Parliament. And it's happening on the same day where he will get Japanese inflation numbers to digest. If it reinforces the case for a more hawkish stance, potentially, that is what we could hear in terms of commentary. And it looks like hedge funds are also adjusting their outlook on the Japanese currency. If you take a look at this chart, it shows you how they are net long positions on the Japanese yen for the first time in 3.5 years, turning bullish on the Japanese currency. A lot to digest going into the rest of the week as well, Lizzie.
All right, Avril Hong, matching her chart there, we thank you from Singapore. Let's turn now to this region, the Middle East, and the sovereign wealth funds that are really changing the game on Wall Street. Keenly aware of their importance in the global financial ecosystem, these state-backed giants are now asking for concessions when dealing with asset managers looking to tap them for cash. One significant change is the push for lower fees and a bigger share of profits. And we can bring in Matthew Martin, our senior reporter for Middle East wealth funds, for more on this. And Matthew, I wonder just first of all why the Gulf sovereign wealth funds are having such a big moment right now.
Well, yeah, I think there's a couple of factors going on at the same time. You've both had, over the past couple of years, these big rate rises in the US, sort of a drying up of liquidity in some of the big sources of capital where the Apollos and the BlackRocks would traditionally go looking to raise money. And then you had in 2022 these massive oil price rises, which meant that we had a fresh injection of capital into a lot of the sovereign wealth funds here. At the same time, they're also really looking to push a lot harder on their domestic agendas. So that's given them the ability to have more money when other people don't have as much, so they can demand more concessions and also start to think more strategically about what they want to get these funds to do for them back home and make them into. They now view themselves as being peers of BlackRock and Apollo. They don't view themselves as just being a pot of money. They like to think that they are global asset managers of the same class. And so they're really trying to demand those concessions to get to that point.
And what concessions do you mean?
Well, I mean, the big thing has been, obviously the private equity industry has for a long time gone on this sort of 2 and 20 fee model. And the funds are really trying to, first of all, they want to push down on fees because they want more of the money to go back to themselves, obviously, as anyone would. But at the same time, to go into that sort of, as I was saying, that domestic story as well, they also want these funds to do more for the Middle East region. They don't want to just be seen as this pot of cash that you can come, take some money and run away with it, and you come back in 5 years' time with some returns. What they want to do is they want to say, we want you to be investing into our domestic economies. We want you to be training our staff. We want you to be bringing your board members here and your board meetings here to put us on the global investment map and not just be this sort of, backwater reputation that the region had 5-10 years ago. So
who's actually managing to command that respect? Who's getting what they want the best in the region? Yeah, well, this is the big contentious question because they're all trying to do it at the same time and to some degree having sort of varying degrees of success. Clearly, if you look in Abu Dhabi, they've been trying to do this for possibly the longest, so they're having some of the best success at trying to do it. And you see, we've had a lot of stories over the past year or so around what they've done with the financial market in Abu Dhabi and using the capital within Abu Dhabi to leverage, to force funds to come and set up shop in Abu Dhabi. The Saudis are also trying to do that a lot now to more limited success. They're a bit more of a nascent stage of trying to do that. They also, the PIF is, although it's been around for a long time, it's been very domestically focused. So it's only now trying to build those relationships with the big funds. So it's still at an earlier stage of that journey. And then at the same time, we've got the Qataris, which, with these big gas field developments that they've got going on, a huge amount of liquidity going on there. They're such a small population that they have to invest outside to digest the amount of money they have, which gives them the ability to be a bit more nimble and be a bit faster moving than perhaps some of the other funds in the region are. All right, Matthew Martin, we thank you. And we're going to continue this conversation now with Diego Lopez, the founder and managing director of Global SWF, who really can tell us more about the future picture here. Diego, the absolute amount invested by Middle East sovereign wealth funds has fallen, but as a share of total state-controlled investment globally, I think it's grown. So I wonder whether you think that these trends are set to continue.
Hi, Lizzie. Good morning, and thank you for having me. Yeah, absolutely. I mean, sovereign wealth funds in the Middle East have been gaining share out of the global deal making. I think this year so far we've seen 50 billion deployed by Middle Eastern sovereigns, mostly Gulf-based. And as Matthew was saying, the profile is quite different. The PIF in Saudi Arabia is being leading the charts in terms of capital deployed, but a lot of it, almost half of it, has been deployed within the kingdom, whereas some of the Abu Dhabi funds are more outward-looking, and the 100% of their capital is deployed overseas. So, in general, very positive picture for the Middle Eastern sovereigns, very active in the global deal-making, but very different profiles within each other.
Do you also see this trend that Matthew was just talking about in terms of concessions being demanded from the hedge fund honchos and private equity giants around the world? And what form are those concessions taking, if you're seeing them?
Yeah, absolutely. I think gone are the days where sovereign funds in the Middle East were considered that money. I think that sort of effect is long gone, and now sovereigns have, first of all, mature. They are very sophisticated organizations with a lot of internal managers and portfolio managers that are very able to invest on their own. But also they've been through the cycle of being fund investor to co-investors to direct investors. So whenever there is a new manager in town trying to fundraise or work with the sovereigns, there has to be a trade-off. There has to be a partnership. And this is very demanded these days. So I think the industry will keep evolving, and the sovereigns themselves will become active deal makers that will only partner with managers as long as they have something in exchange.
And how concerned do you think that the global asset managers should be about what you talk about, Saudi Arabia's PIF being increasingly focused on domestic projects?
Well, I mean, I think it's what they have to endure in order to work with them. And I think obviously, we talked about 50% of PIF deployment being in the kingdom, but still they're deploying 7 billion so far this year overseas. As you all know, they are investing in sports, retail, electric vehicles, and so on. So things that ultimately benefit the kingdom as well, but they are deploying that capital overseas. So managers can still benefit from Middle Eastern funds. And if we compare them to like Singapore sovereign wealth funds or Canadian pension funds, they are definitely more active. It's just that they have to evolve in their way of thinking, the managers, and find a proper partnership to work with the sovereigns. So the way of doing business may become different, but there is still business to do in the Middle East for sure, for managers elsewhere.
Well, how do you expect the PIF's deals outside the kingdom to change over, say, the next 5 years? You talked about football, for example. Do you think the makeup of that investment is going to shift?
Yeah, again, they have become very sophisticated. They are definitely spotting global trends when it comes to investments overseas. They're not only investing about entertainment and sports because that's the model that is going to evolve in the kingdom. Also, they're looking at electric vehicles, they're looking at diversification. I think one trend that we're seeing in general is sovereign wealth funds in the Middle East trying to invest more in Asia and emerging markets. As you know, there are some of them that are very weighted towards Western markets, just because traditionally that's where the opportunities have lied. But in the future, we expect them to invest much more in Asia. So speaking of PIF, they got their QFII license to trade in A shares and H shares in China a few years ago. They opened an office in Hong Kong, and they've been increasingly active in both China and overall in Asia. So that's a trend that we're seeing across the Middle Eastern sovereigns. And I think that will drive the industries. So if you look at China, they may be investing in trends that are linked to the urbanization and growth of the population. If they're investing in Korea, it would be more on the electronic side. So I think at the end of the day, whenever they invest in new countries or increase their weight in new countries, that will drive the industries and the kind of investments that they will pursue.
Really interesting. And Diego, just finally, do you reckon that other big investors, like, for example, the pension funds, are going to start making these demands for concessions like we've already been seeing on private equity and the hedge funds?
Yeah, absolutely. I mean, we call pension funds as part of the state-owned investor community. And it's interesting because public pension funds in the Middle East have also become very active. As you know, very sizable pension funds in the Middle East, like GOSI in Saudi Arabia, PIFs in Kuwait, or even the UAE funds, but also private offices, right? So we see an increasing number of private offices, whether linked to the government or to the royal families or not, that are also becoming quite active, both in, domestically and overseas. So I think that's an evolution of the state-owned investors, as we call it, as a whole, that we will keep seeing change over the next few years. I mean, we are forecasting the overall AUM of the state-owned investors in the Middle East to reach $8 trillion US dollars by 2030. And part of it will also be driven by public pension funds and royal private offices.
OK, Diego Lopez, founder and managing director of Global SWF. We thank you, as always. And for more of these stories looking into that intersection of wealth and power in the region, do sign up to our Mideast Money newsletter on Bloomberg.com. Coming up on the programme, as the new strain of Mpox spreads from Central Africa, the emergency response is facing serious funding challenges. We'll go live to Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. As a new strain of the Mpox virus spreads from Central Africa, one of the biggest challenges in the emergency response is securing money to fight the outbreak. Countries impacted have received little so far. But let's bring in Bloomberg's healthcare reporter Janice Q, who joins me now from Johannesburg for the latest on this story. Janice, just how fast is the virus spreading in Africa?
It's spreading pretty fast. I mean, the area that's, for lack of a better word, the epicenter, which is eastern Congo, is a particularly tricky area to be working in. There are a lot of small-scale miners in the area, and there are also 4.2 million or so displaced people from years of internal conflict. And a lot of the people in these camps are children who are malnourished, and people with other infections or comorbidities. So working in that area is particularly tricky, and the surveillance of the data of which strain is spreading and how fast it's spreading is not that easy to come by.
You mentioned surveillance. We know that it's surveillance, education, vaccination in response to a deadly virus like this. The world's been through it before. Is there enough financing available to get all that done?
Not quite yet. The emergency response that both the Africa CDC and the WHO called last week, certainly part of the reason for calling that was to start releasing funds. Both the Africa CDC and the WHO did find funds through other mechanisms, emergency mechanisms that they've got, and they've released some of that. More is expected in coming days, but they certainly need the support of the international community. They need donors, and they're working very hard to do that. The vaccines will come, hopefully quite soon, in the first batch, but getting those shots into arms is not a simple process, and it's something that you want to do before someone is infected. So there are other measures that are also in place, therapeutics, and that hopefully will start moving quite quickly now.
And we've also seen this particular strain of Mpox showing up in Sweden and Pakistan and the Philippines. I wonder whether the health authorities are expecting it to spread further.
I think they are, and they're trying to remain calm and not cause undue alarm. But the truth is that borders don't respect an infectious disease. These things will move. And so surveillance is certainly being increased specifically from people coming in from that region. As long as someone's, presenting when they get back to their home country and being tracked quite carefully, there should be some level of containment. And we know that this disease primarily spreads through close contact, sexual and otherwise. So, isolating, just being a bit careful will go a long way.
OK, Janice Q, we thank you for the update as we continue to monitor the spread of this deadly virus around the world. Coming up, China's big electric vehicle firms are on the road heading towards earnings. But will tariff woes put the brakes on sales? We'll bring you a preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. It's another busy week for earnings in Asia as we get results from China's big electric vehicle firms. You've got Xpeng, Geely and Xiaomi all expected to report higher sales, and that's despite intense competition as well as the threat of tariff hikes from the EU. Let's get a preview now from Danny Lee, our transport reporter who joins us now. Danny, what should investors be watching out for this week?
I think investors will be keeping an eye on the strength of these earnings, and particularly where we start off on Tuesday with Xpeng. They're going to be delivering their earnings, and they've been struggling from the outset. And as an upstart, they made a big splash years ago, capturing the attention. But they have been struggling to scale up, and so they have met their targets in the second quarter on sales. But to what end can they deliver less losses, because they've been loss-making for now so far? They've sought external funding from the likes of Volkswagen, but these losses can't continue forever. And then on Wednesday, we also have Geely, one of the bigger automakers in China out there, and they've been on a tear, frankly. Their sales have been very robust, despite the backdrop of this Chinese autos price war. And they've been doing very well on both electric and hybrid vehicle sales, but also on exports as well. Exports, which has become a very important component. But again, the backdrop of tariffs remains a threat, not just to Geely, but to many automakers out there, and particularly China's right at the front and centre of it.
And Danny, we've been talking on the programme about the US politics, about the potential impact of inflamed US-China tensions on inflation. I wonder how a ramped-up tariff war is going to affect these Chinese companies.
Yeah, absolutely. I think for the EV companies in China, they've been very much trying to go global. There is a pushback from the likes of the US, Canada, and also Europe. Clearly in Europe, the tariffs are now technically in effect. The US are going to lay out their groundwork for when tariffs will come in fairly soon. And obviously, Canada is still looking at what it might put in place. But when you've got these Chinese EV firms looking at the Middle East as a source of hope for sales and interest, and particularly investment in these Chinese EV firms, there is hope that there could be sales of tariff-free EVs coming from China to the Middle East as a get-out clause.
All right, Danny Lee, our transport reporter, we thank you, as always, for that preview. As we look ahead to those earnings, as you say, we get Geely and Xiaomi later in the week, as well as Xpeng reporting. So we keep an eye on all of those. But just checking in on the markets before we head out, we've got the MSCI Asia Pacific Index currently higher 0.5%. And as we look ahead to the start of the cash trade on Wall Street, futures are flat to the upside, as they are for Euro stocks Stoxx 50 futures as well. It's going to be a big week when it comes to economic commentary. We'll hear from Jerome Powell at Jackson Hole on Friday. We'll also hear from the Bank of England Governor Andrew Bailey and the European Central Bank Chief Economist Philip Lane. But it's a bit light on the data front, at least out of the US. We're going to get some data on housing. We'll get weekly jobless claims. But that really puts the spotlight on the politics and the geopolitics potentially as catalysts for sentiment. You're looking at Brent currently trading just shy of $80 a barrel, weaker 0.2% currently. And we do monitor those developments here in the Middle East, waiting for a Gaza ceasefire deal and a potential Iranian retaliation. But that's it for Horizon Middle East and Africa. I've been Lizzie Burden in Dubai, and stay with me for Daybreak Europe. I'll be taking you towards the cash open. This is Bloomberg.